With the Greek debt crisis seemingly in abeyance for the moment, analysts' eyes switched to China, where the government released official figures for manufacturing for the last month. Those figures did not meet analysts' expectations and appears to have rekindled pessimism over the global economic health. On the other side of the world, speculation increased that Iran was going to widen its embargo on oil exports. At the moment, it's embargoing exports to both France and the UK, and there is concern that it will actually extend that to more European countries. As a result, we saw the indicator rate for crude going up to around US $106 a barrel. Now that's up nearly $8 a barrel over the month. If prices stay at this level, we will see some action at the petrol pumps. Looking at the global markets then, the equity markets are actually relatively flat across the board, with the New Zealand market, the US market and European markets down slightly. On currency, the Chinese news has had quite an effect on the Kiwi, which has weakened against most of its major trading partners, including and in particular the US, where it's fallen through 83 cents. New Zealand beef and lamb has revised downwards its estimated lamb kill for the season to around 19.5 million animals. This is driven predominantly by the fact that the breeding flock has decreased more than was expected, by roughly 6.5% on what it was last year. However, the very good spring and ongoing seasons that we've had have meant that actually lamb numbers are expected to be up somewhat on last year, roughly 2.5%. Also with the grass market, it's meant that the average weights are significantly up. At the current time, they're roughly up 4% on last year, although across the whole season they're expected to only be up around 1%. Looking at the total exports, this translates to roughly 360,000 tonnes. In Australia too, the flocks are up there, and their expected export tonnage is around 170,000 tonnes, so relatively small compared to New Zealand.